Yeah, so as mentioned, this is our final panel for the day. Now it's getting institutional. And with that, I'm happily inviting you to the stage, handing over my microphone. And yeah, as mentioned, this is the last one, so we might have a bit of an overtime in the end. So please prepare fancy questions to really press and, kill our panelists with interesting questions in the end. And then we have an opening aperitivo, so don't run away. I think there's drinks and music and other stuff happening, so just stay tuned. And with this, please come up stage. Here's some, okay, as you wish.
Hello, everyone. Welcome to the Institutional DeFi discussion panel. The use cases of DeFi in institutions has the potential to create a whole new paradigm in our financial systems. Regulatory systems and authorities are trying to use technological innovations in order to find and redefine the financial systems in a new way. And today, together with Peter, Julian, and Hagen, we are going to explore the landscape of institutional DeFi. My name is Mahsa Doorfard. I am the Sales and Marketing Manager at Coinix, which is a blockchain investment firm. And now I'm going to ask our speakers to shortly introduce themselves. Julian, I'm going to start with you.
Hi, nice to meet you guys. I'm Julian, originally from Frankfurt, Germany, recently moved to Switzerland, building a DeFi protocol since almost 2.5 years on Solana. Therefore, also got in touch with Hagen and Peter, which are now happily also called privately my friends, so great to be on stage with them. Basically, that's it.
Yeah, hi, I'm Peter. I was able to introduce myself in the last panel already, but maybe again, co-founder at Unstoppable Finance and Iron, currently building infrastructure for institutions to use stablecoins in their processes. Before I was CTO and co-founder at Solaris Bank and built Börse Stuttgart Digital Exchange as a managing director.
Pleasure being here. My name is Hagen. I'm a lawyer by trade. I'm Denton's head of corporate blockchain. Former regulator. Used to work for BaFin, the German securities regulator, a former director with the Ministry of Finance and Federal Chancellor in Berlin. And now I do crypto law exclusively. Thank you.
Perfect. So let's start. At the beginning, I want to ask about the institutional DeFi ecosystem layers. So if the traditional finance extends to decentralized finance, how will the ecosystem look like? Julian, would you like to start?
So I think we're actually already at this point where it's like beginning to merge and beginning to happen. We have like big institutional players investing into DeFi already. So if you look at the biggest DeFi protocol, or one of the, I think, like most known DeFi protocols, like 1inch, that's an DEX aggregator. I think it's basically also financed by Binance Labs, so by centralized players. And I think we're already seeing this merge of traditional finance players and institutional players and DeFi players. I think we're already in the process.
Yeah, so from my point of view, there have been different waves in blockchain development. So I think like everything kicked off with Bitcoin, like as a means of payments in a decentralized manner, so like peer-to-peer. Then kind of the first wave, from my point of view, started kind of finding crypto assets as an asset class to trade, so like cryptocurrencies and all that kind of stuff. And there we now see like different evolutions. So also what Julian said, that it started with like retail traders and then kind of like extended to institutional traders as well, investing in that asset class, family offices, but also kind of like all kinds of investors. But also kind of there's like a lot of infrastructure developed for them, so you can invest directly, kind of like on like the blockchain way with a non-custodial wallet. On a centralized exchange, there's like certificates, ETCs, ETPs, ETNs, and whatnot. So also to invest like through, let's say, a traditional infrastructure. So I think that's that part. And also as the panel is also about DeFi. So for me, like DeFi is in comparison to this first wave, not about like the assets themselves. It's about the service, like the financial service that's offered. And of course, kind of institutions could also leverage like DeFi infrastructure to offer their services to clients or consume services in a completely new way. I think that's pretty much in the beginning. Then, of course, maybe to say as the last point that there's also a lot of interesting stuff happening in the asset space when it comes to real-world assets, because I think, of course, like the asset class cryptocurrencies is interesting, but having digital securities and all kind of financial instruments and financial assets being tokenized and also making it investable using the infrastructure, I think that's also a big topic for institutions in the future.
And just to add another layer to that, because it's a really good question, just if you want to check on the status of whatever it is that you might be inquiring about, it's always a good idea to check on the status of regulation. If there is any kind of topic in this regulation about, it usually means the topic is maturing, the topic is getting more interesting, the topic is getting more accurate even in a way, and that's exactly what's happening here, at least when it comes to certain layers of the ecosystem. You started with basically torturing the general conventional statutes that we have for the capital markets, try to like fit some form, some version of crypto into that. Started with Bitcoin and other options or other financial instruments that we tried to assess when I was at a regulator. And now you actually do have the situation. We have specialized regulations such as MiCA, such as the DLT pilot regime, or what Peter mentioned, digital securities in our EWPG, Germany's first Electronic Securities Act. So the ecosystem is indeed maturing, and we have regulation to prove it.
Indeed, regulation is a crucial topic that should not be ignored. Now, let's say for institutions, is it better to create their own private permissioned infrastructure, or is it better for them to find some kind of option which is like a company or a DeFi service provider which offers permissioned access on an application layer? Which one would be a better option for institutions? Julian, would you like to start?
So I could talk a little bit from experiences and what I basically witnessed in the market from multiple instances where basically CeFi operators or CeFi companies tried to work directly together with DeFi protocols. It was always a mess because I think the main idea differentiates a lot in also how the team operates, how the teams are set up. Like, I mean, the most protocols that I know are highly distributed. The people work from all over the globe, different time zones. There's no basically very hard reporting line. The hierarchies are very flat. For example, a guy I recently met in Zurich, the guy from Camino Network, they're like a very, very small team, but they have like quite big numbers, so to speak, on chain, but like very basically like linear reporting lines for them. So I think it would be very hard to integrate this or directly work together, because like I think that the TradFi players, the CeFi players would know who to basically who's the point of contact and who's basically want to play when something's not working. And I think maybe for the traditional finance players it would be easier to create this in-house in a basically safer environment, so to speak.
Well, somehow, so I still have the same opinion as I had when I entered the space, because so back then, so when starting to understand the concept of blockchain, for me the most important point is that it's open and that it's kind of like multi-tenant, like used by multiple people, like everyone uses the same infrastructure together, and that this enables like a lot of use cases. So you can whatever have like remittances across the globe, settle the same assets, like atomic transfers, like of like assets and delivery versus payment and all these kind of things. And so once you have kind of like separate infrastructures, we somehow get closer to the financial system like it is today. Yeah, so every bank has a core banking system. That's kind of their layer 2, if you want so. And then there's like the layer 1, whatever the SEPA network or whatever other settlement network or a remittance network. And I think that the big advantage in the end, if you have a public blockchain first, there's like a lot of innovation happening. So I think also like watching the space since 2016, there's so much. I think like no industry group would have come up with the idea of an ERC20 token, make it public, and suddenly everyone is building applications with it. Every wallet is compatible, and protocols are using this kind of like as also like the money Lego to build other services around. So I think there's like these developments. Actually, so that it was like a whatever years-long process to negotiate the PSD2 and like the technical standards for that. And I think like in the decentralized world, all these standards are set by the market. So somebody has an idea, other people jump on it and then start using it. And therefore, I really believe that the more public permissions blockchains are used for like any use case, the more kind of we have like the common infrastructure and save time and money and energy and whatnot. And at the same time, we share the standards. But there's like a big but on this because so I mentioned earlier as well. There's like a DORA regulation also coming, which in the end regulates also the IT compliance for certain infrastructures, and many of these kind of regulations are written with a centralized pen. So kind of course trying to be technology agnostic, but still like the architecture. So of having kind of a distributed system with shared ownership versus my own data center where I have the full control, somehow kind of end up in like the mixed situations where at the moment I think so if institutions want to be DORA compliant and kind of want to use public blockchains, so I think there's a gap.
Thank you. Well, indeed, you have different layers that are trying to like peacefully coexist next to each other, but that doesn't work. You have obviously the economic layer, you have the technical layer, which were basically described by Peter and Julian. Then you have the regulation, the legal layer, unfortunately, and that's the layer that's creating problems. Because I've basically watched myself journeying from being a regulator, thinking like, where's the issue, guys? You just like try to fit into the legacy systems, try to make your stuff compliant, to where I'm standing now, trying to be as open as possible and trying to advocate and trying to make things possible for my clients, to basically offering services as openly as possible. Nevertheless, and that kind of like coincides with what Peter's already pointed out, DORA, for instance, that regulation that gives you certain IT requirements that you cannot really fulfill with certain blockchain ecosystems or with certain blockchain setups. There's other statutes, other laws, the German Banking Act, for instance, Securities Trading Act. They all, for instance, look at centralized entities, and that is already a problem when it comes to the real good stuff that, for instance, startups, scale-ups can offer. So there's, let's just say, friction, and we need to solve those frictions later.
Yeah, so this is a very controversial topic. Some experts choose private blockchains, some experts go for public blockchains. But yeah, let's see what will the future hold. Now, let's imagine that the institutions have actually entered the DeFi world. What are the opportunities there for them? What kind of roles can they have in this ecosystem? Peter, you want to start?
Yes, I can try. Well, so you used already an important word, which is the word role. So I also, a long time ago, I came to the conclusion that in the end, kind of the roles in financial systems almost stay the same for a long time, but kind of the technical implementations and capabilities change. And in the end, so when it's about, for example, assets, so there's like the broker, there's like the whatever proprietary trader, there's like the multilateral trading facility and so on. And I think these roles are pretty generic, so that I also see many of these roles also happening in the DeFi space, but just in different implementations and sometimes with like shared ownership. So and therefore, I truly believe that also like for bigger corporations, for institutions, that there's actually a really very easy path into the whole crypto space, either in the centralized and also in the decentralized space, because they can easily kind of like play the same role that they did before, but use different technology. Yeah, and that's I think many institutions are a bit reluctant, kind of like when tipping their toes into the cold water. So, which mainly, I guess, also comes from the fact that crypto still is a big casino, and where also at least I can say half of my friends, like in normie life, they kind of like there's the one half that really likes what we are doing, and then there's the other half that just thinks it's complete nonsense. Yeah, and where I really always like kept pushing on explaining like, okay, so what's coming with the technology and why is it better? So how could like a world look like where like some parts of the infrastructure are really shared across multiple institutions. For example, like banking, like and what a core banking system is doing, like in a technical sense, like a bank account with an account number, with transactions, with an owner, and then the transactions in between, kind of like with a subject field and a number and an amount and so on. It's like super standardized. Yeah, so you can't. It's very difficult to come up with like that. A bank comes up with the idea, so I have the better remittance instrument with like new fields and so on, because in the end, everyone needs to share the same standard. And therefore, I really believe it would make so much sense to just kill the core banking systems, have like accounts in form of wallet addresses. Of course, you would need to have confidentiality for this, but I can also say a little bit more about this on the later as well. But also, we could save, I think, a lot of energy and a lot of CO2 emissions and so on, where we just would say like, okay, bank accounts and transactions is just boilerplate stuff, so that everyone is sharing, and the financial service starts on top of it. Yeah, so that, for example, when it's about lending, when it's about investing, emissions for assets, primary markets, secondary markets, and so on. And I think such an infrastructure, like for the future, could make a lot of sense, but of course it takes a long while to move there.
What do you think, Julian?
So I totally agree with Peter on actually all his points. But what's also very important to say, like the roles actually that could be filled in by institutional players are also the same opportunities which can also like used by retail investors. I mean, that's the charming point about DeFi. Institutional investors have the same access to investment opportunities, or like basically participating in liquidity pool as a retail investor. So there's no basically gatekeeping in capital requirements, for example, between like institutional and retail investors. I think that's a very interesting view, basically on the DeFi opportunities. Like you can use, I mean, the same access. You have the same access to all the financial instruments, basically, and it's not like basically capped or you're not left behind as a retail investor.
Hagen, you want to add something?
Yeah, because same opportunities is a good like word to use. Basically, when it comes to roles, it's all about like how can we get started? How can we basically progress as an industry? So institutions entering the DeFi space should probably like look for collaborations with DeFi native companies, because what we already know is the companies in that space, they can outperform the institutions when it comes to the technical aspects, also when it comes to the, let's just say, the economic aspects. So find some kind of collaboration, because what institutions usually bring with them is the license question. They already have licenses. They will probably be capable of somewhat shielding you from the big bad wolf, aka the regulator out there, from potential litigation, that kind of stuff. So try to find some kind of collaboration, because again, you can outperform them.
Yeah, very good point. Collaboration is the key. Now, if we use the DLT or distributed ledger technology in the traditional finance, what optimizations will happen? What positive things come with it? Julian, you want to start?
I mean, obviously, it's easier to understand what's going on. I mean, like the most centralized institutions are basically black boxes. I mean, FTX is a very, very famous basically example you can use. I think if you basically perfectly use DLT technology, it should be like openly audible. Everybody should know where's my money actually going, who has my money at the moment, where's my money, what's it going to be used for. And I think a lot of this like centralized players, be it like FTX or other ones, it's like always the problem with the accountability and like basically this black box effect. You only know when something really, really went wrong, but it's basically too late.
You guys want to ask something?
Okay, then I go first. So I really want to highlight this aspect of automation. Because also back in the days when we were building Solaris, I being responsible for technology, I always was thinking like, okay, I created a term called compliance in code, or compliance as code, which in the end meant like the more you can automate, the less it kind of like comes in the way of like developers and engineers and so on when dealing with it. Because like automation usually leads into kind of like, of course, like standards being executed the same way all all time over, but also scales a lot. Kind of, it's much faster, it's much cheaper, and then also kind of like people don't need to care that much because it's happening in the background. And I think DeFi for me, like, so when I first saw kind of like the first protocols popping up, kind of put that spark in my head that kind of DeFi is the, let's say, highest form, or probably the maximum form of compliance as code, because everything is automized, everything is executed by the computer. And so I made that example, I think, 100 times already, looking at the Wirecard scandal. So this was not machines doing something wrong. So they were like humans manipulating and manipulating other people and so on. And like criminal behavior came to the surface. And so if you encode certain compliance and regulatory practices into a software program, the computer usually doesn't have an incentive to do things differently. It always gets executed the same way, leaves audit logs, and also then regulators and audit companies can look at the audit logs and eventually even automate kind of like checking the audit logs. And therefore, so I think this like bringing these two pieces together, like institutions and the reality that they're regulated and need to follow certain rules, plus like the technology that we now learn from the DeFi space to automate everything, every step, leaving the human out of the equation, because like we have regulation because humans manipulate and we need to look at their fingers, what they're doing all the time in the background. Yeah, and therefore I think there's like a kind of match made in heaven between these two pieces, and therefore I hope that yeah, there's much more development in the future on this.
Just to add, because you mentioned efficiency, because efficiency is actually the key word here. When that was back in 2020, I had the distinct pleasure of drafting Germany's Securities Act, the Electronic Securities Act. And when you have that kind of pleasure, which is not really a pleasure, just keeping you up at night, and it basically kills your soul, but that's a different matter. You have to basically write into the law why it is, what the reason is for drafting yet another law and basically costing the taxpayer money. And you have to come up with actual reasons why. And so we were writing this, and it turns out, okay, digital securities kind of like the same like conventional securities, but here's what you can do in terms of efficiency, and it's actually a part of the law, part of like the rationale of the law. So there you go. You have like officially approved the fact that blockchain is way more efficient than the conventional system. And by the way, I like that you said kill the core banking system. You know, that's just something where we have to get actually.
Yeah, indeed. For sure, this road towards institutional DeFi is not going to be easy. There's always some obstacles. So can you tell me what are some of the hurdles of institutional DeFi? This time I'm going to start with Hagen.
Well, I'm a lawyer at the end of the day, so I'll start with the legal facts as far as that is concerned. The hurdle is basically regulation right now, because you really have to make sure that at the end of the day, you fit snugly into that compliance matrix that we kind of like already talked about. So I guess this would be a good point to talk about what the actual DeFi legal landscape is looking like. Obviously, we're in Munich, we're in Germany, so the German regulator has the final say. So what is BaFin actually saying about their stance on DeFi? 3 legal elements that all need to happen at the same time. First of all, whatever it is it comparable to financial services that you're offering? That's the first legal element. Second thing, are you even addressing the German market or any other respective European market? And then, last but not least, is there a centralized entity? Is there something, some form of centralization effort going on? There's a recital in MiCA, for instance, that lets you know if you're completely decentralized, you're basically, you can offer your services, right? But beware of semi-DeFi projects. So keep that in mind. Those 3 legal elements here when it comes to the German or European DeFi approach, and regulation can be a hurdle, but you can also utilize it to your advantage.
Yeah, I think for the institutional adoption, there's also again this point of accountability and liability. I mentioned it in the DeFi regulation panel earlier today as well. So if an institution wants to consume a certain financial service from whatever entity or whatever group of people, so then usually it's the question, okay, what happens? What's the situation when something goes wrong? And if I don't know where to pull whatever legal entity or a group of people in front of a court to kind of make like a financial complaint or something like this. So if there's no handle, it's very likely that they are not taking the decision to use that service. So that's the crux, and therefore I really believe that the middle ground is somewhere where you have like a digital corporation or cooperative based on tokens, so where at least there's like a legal entity structure behind DeFi, so that can also kind of that eventually has like a location. So there was this Mario Draghi report. I admit I didn't read it because it was too many pages, but I read a few summaries of it. And there's also this idea of this European company structure and so on. So because like also as an idea to make Europe more competitive on a global landscape. And I could imagine, so why not kind of like bringing in this idea like of a cooperative based on tokens as well into this equation, because Europe is already leading the crypto space when it comes to also regulatory adoption, and I think such a legal entity could become a very important key point to also find like a middle ground for consumption of DeFi and also like for retail adoption, so that so they know who's liable behind. And then there's the other aspect, which I think is also mostly untackled in the crypto space. That's confidentiality, because we know it already like from retail adoption. So I think as long as I can know Julian Solana address and can stalk him, kind of what the next grass cutter he's buying and so on, and then I buy a bigger one. So I think like people won't use it. So they're like they know there's like privacy, especially in Germany. How much money I have is kind of a very private thing, and so this privacy needs to be assured. And there's of course projects. So we've been involved in like the implementing confidential transfers, like for Solana, based on the token extensions that have been published, and so that in the end, kind of like the sender, the receiver is kind of shielded, and also the transaction amount is shielded. So I can pay a coffee without knowing how much money that coffee shop already earned with selling coffee. And I think this kind of technology needs to be there, but also all handled in a compliant way, because there's in the end FATF guidelines, there's rules and laws around money laundering and kind of what how to comply and so on. And I think in the end we need to marry all these aspects, and I think there's at least the opportunity to have a technology where every transaction is private, but kind of, and there's like some checkups in the background whether there are some whatever laws being scratched or vulnerated, and if so, then kind of like the privacy gets revealed, and I think that would be just the perfect way to deal.
Julian, you want to add some points?
Coming back to what Peter said, like from another perspective regarding the privacy, or like how we call it, like being doxed or undoxed, I think a big problem also like for DeFi projects to collaborating with TradFi, CeFi projects is basically the regulator, as Hagen said, especially if you are like incorporated in another country. For example, BVIs are quite heavily favored by DeFi projects, or Dubai now at the moment. When you have this like uncertainty regulation-wise, is always like a little bit of dangerous, basically, to appear in public, or for example, like to dox yourself. So basically getting associated with your company in public. That's why a lot of like people who run protocols use stealth mode founder on LinkedIn, or use some, I don't know, avatars on Telegram, and cannot like publicly be that visible like Peter and Hagen are in the press. So I think that's basically still a hurdle you have to take if you really want to collaborate on an official level, basically like partnering up with DeFi projects and with the old economy and the new economy. You have to have some regulatory framework that basically protects basically DeFi projects and its founders, not basically gets you on the spotlight and getting targeted by the BaFin or by the FINMA or by whatever like regulatory entity for I don't know whatever reasons possible. So it's better actually to stay in stealth mode, even if people like forgot like every quarter, hey, what are you actually doing, what are you actually building, and you have to remind them basically every time you have them pitched in anew, you have them show them your Twitter account anew, just on a personal note, by the way. And I think that's a big thing, basically, to protect this, like people who want to basically build this new stuff and don't get crushed by the regulator.
Yeah, but I think there's another aspect on this, because I was talking about like the liability and kind of who's behind, and that's kind of like on the one side, like for customers, it's relevant to know, okay, so if something goes wrong, so where can I ask for a refund or something like this? Who can I make responsible for this? But I think there's also the other side of the medal, which is that's just to carve that out also from what you just said, because. Let's say 3 developers start a project in Germany, develop a protocol, there's like billions of money in there, there's a mistake, and then somebody who lost whatever, a lot of money, then finds out the names of them. So, okay, so I'm not a lawyer, yeah, but so maybe you can you can jump in. But I think like the legal form that these 3 people have is like a GBR, and in the end they're personally liable for this. And I think, so we also have to protect the developers, and so what I mentioned earlier with this digital cooperative on token basis, or with cap table managed by tokens, I think that could be a good middle ground, because in the end it also, if it's a limited company, it protects the developers as well, but also of course puts certain don't want to be grobfahrlässig and so on, so you need to at least kind of you regulate yourself to some extent, kind of to do the best for you, but also for the customers. And I think that's really one of the middle grounds that you could find, kind of to protect both sides of the medal.
And to add to that, because that is exactly the point. Liability questions in the DeFi space, really important topic, really dangerous grounds that you can find yourselves on. Okay. What Peter mentioned, the GBR thing here in Germany, for instance, the general topic on the meta level would be a general partnership. And that's, for instance, something that we've been seeing all across the globe. We've seen that in the US, where there's litigation going on for certain, let's just call them like blockchain entities that were labeled general partnerships. If you, in a general partnership, basically from the legal standpoint, is a bunch of people getting together doing something and fostering a common purpose, and that common purpose threshold is super low. Could be anything. Could be 2 guys, 3 guys, 4 guys getting together, sharing funds to buy an RV to go to the mountains to check out the Alps here. That's a general partnership technically already. So if there's billions and millions involved, the regulator and other agencies and other litigants will take a very close look at that. And if you are being labeled a general partnership, there's almost nothing that you can do to protect yourself against potentially unlimited liability. And another angle to this is, do not try to seek out exotic jurisdictions like BVI or whatever, okay? The regulatory arm of the regulator, of public agencies, of the government is long, okay? There's usually agreements between governments, so they can find you. Private people can find you, hiring lawyers, trying to come after you. So shield yourself with the right form of cooperation, or if you really want to go all the way, try to be as decentralized, as radical as possible. Really use all the tools of the trade that the DeFi space is offering, then you actually might stand a chance.
You mentioned many points about regulations. Since we have a lawyer in the panel, let's get a little deeper into regulations. What will be the solution for the regulatory mismatch and this uneven market structure in the world? Would you like to start, Hagen?
Well, I don't want to say I have an extreme opinion about that, but actually having worked as a regulator, you try to find yourself protecting the public, but at the end of the day, you have to like really keep the scores even when it comes to enabling the market to come up with solutions, and that's what's kind of like missing here right now, because the regulator is forcing us to be compliant with outdated rules. So that's the problem. How could you solve it? Because that was your actual question, and that's the number one question. Probably from a purely legal standpoint, have a catch-all phrase in purely crypto statutes, like a DeFi statute, for instance, but specifically state that whatever is not prohibited is allowed. Okay? Do not compare them to any legacy conventional statutes, and open up the space basically appeal to people's common sense, and that's how you would actually get rid of that mismatch. Now, that's probably easier said than done, but that would be a radical step. That would be something that we should be talking about. MiCA, for instance, markets in crypto assets, that kind of regulation deals with basically centralized entities, doesn't deal with DeFi, but at the very end of it, there is a report that's being mentioned that will be prepared very soon, that will be published very soon, and that also will deal primarily with the status of DeFi. Based on that report, there might be regulation coming down from the European level. There might not be any kind of regulation, right? But prepare yourselves for that and maybe take a radical step.
Yeah, so from my point of view, I think like regulation starts kind of with this liability question, and I mentioned in the other panel already as well that the kind of, I think if this question with the legal entity behind and kind of like some structure would already be solved, I think then we could also simply give it a go, just like, okay, let's try with DeFi and see what other rules we need to have. But I think we kind of like if this liability question would be solved, we would not necessarily need to introduce much more financial specific regulation on top, because either things would match into the buckets that we already have, kind of with MiCA or also with other rules. But also I think this kind of like this liability question is really the fundamental one that is mainly unsolved, and I think the rest could either be fixed through like the market itself, kind of that certain offerings wouldn't be consumed or so, or there would be and kind of like regulation. So that's what I learned. So when I as a tech guy came into the space, I learned that regulation has always been something reactive. Yeah, so there was whatever in the 60s or so, the 70s, there was front running on stock exchanges, and then there was a rule kind of for like insider trading and so on and so forth. So in the end, there was always kind of like a trigger point, so that kind of there was like certain behavior in the markets, so that was unwanted because it's whatever unfair or like has societal costs. So there were rules introduced, and now like in the last years, we see somehow the opposite. Kind of there's first the rules, and then there's still kind of some things breaking, and therefore as DeFi has so many new components, like there's like a new infrastructure, there's new kind of like assemblement of roles and so on. So I could imagine if you start kind of with this legal entity structure first, you could just like give it space for experimentation. And like another thing that I learned in like when working in banks and so on is like, what does risk mean? Risk means kind of a damage multiplied with a likelihood that this damage is going to happen, and kind of as long as there is just like tiny amounts of money deployed, well, okay, so we could like let the markets find out how regulation should be shaped, and then introduce the rules when we see kind of like big damages. But yeah, so I think unfortunately these times are now a bit different, so that the rules get first introduced, and then innovators have to find a way how to comply with them.
You want to add something, Julian?
So I basically agree very much with Peter. It's quite hard basically when you design and when you build and implement a product basically to not like get into any trouble. It's quite limiting, and actually what Peter basically just like suggested, like the market is basically self-regulating. If you wouldn't have any demand in this kind of services and financial services, people wouldn't build it, people wouldn't request it, people would put their money into it, and basically regulating this to death and basically stopping every innovation in this field, and then later showing, oh, okay, what survived basically the regulatory hammer swing is a little bit depressing for the people actually building and also investing their own time and their own money into projects. Like a lot of people who use their own projects in DeFi and also invest in their own projects and also provide liquidity for them with their own personal money. So I would highly agree with Peter in this, like, let the market regulate itself approach.
So moving away from the hurdles and the opportunities, are we there yet? Are the institutions ready for the mass adoption? How do you see the future of the institutional DeFi in the next 10 years? Who wants to start?
I can go first. Well, so I think so when it comes to, so I was describing in the beginning the different waves like of adoption, and I think so when it comes to this first wave, when it's about assets, I think we're pretty far in the adoption already. So therefore, kind of like there's like good progress, I would say. We now have these like developments around the real world assets, and kind of so that we need to have much more digital securities laws that like we have in Germany. Yeah, so we need to have them like all across Europe and eventually also all across the globe, because then it starts to become interesting. We have blockchain technology, we have money based on blockchains with stablecoins, tokenized deposits, then CBDCs in the future as well, and then we can settle like any kind of asset like atomically on chain, and I think so. Then we're really talking about this future infrastructure that's used for everything, kind of for money, so like representing money, for representing assets of any kind, but also to implement services like exchanges and so on, market maker integrations and so on, everything on the same platform.
Perfect, yeah. So we probably need to create some kind of a set of test nets and standards so that institutions can adopt to and move forward. The technology is evolving, is maturing, more regulations are getting implemented. And institutional DeFi might not take us to the moon, but it will definitely be an exciting journey towards an intriguing global financial system. So I think it's time for the Q&A. We're going to have a small Q&A session.
I just need to steal one of your microphones. Thank you.
So-
That is your final chance for a question tonight, because as mentioned, this is our final panel. You are here. Go for it.
Thank you. So in the past, we see a lot of TradFi scams like Libra manipulation and stuff like that. Let's go totally crazy. Can you foresee a future where the regulator actually is forcing like publicly available smart contracts, whatever, on the banking system? So maybe a very niche product, they have to use these kind of technologies, so they're audible, whatever.
Yeah, there's a lot of research also being done, kind of like integrating directly into like the supervision into systems, and also, so I personally also see one of the advantages also that comes with deploying on a blockchain. It's kind of you deploy it once and then you can't change it anymore. So which in the end means you could also have like the audits on not only the technical stuff, but also kind of on like business like stuff. So is the financial service implemented in a way that it complies with any regulation? You could have that upfront, yeah. So that whatever you develop it, you talk to your auditing company, so they check this, then this goes live, and then you don't need to audit it anymore. Yeah, so because kind of it's not changed, it's running forever the same way. You don't need to do this every year. So like you do when you get an audit with your core banking system, you get it audited every year. And I think you could simply use that superpower that comes with like unchangeable, immutable infrastructure. And then kind of the only job that remains is kind of to supervise the data. Yeah, so kind of how are whatever the interest rates developing, how much volume is going through, are there any leaks and so on. And so this, from my point of view, would then also really change the role of supervision in the future.
And that's a really good question that you're asking, because the concept itself is called embedded supervision, and there's already interesting projects being contemplated. At least there's an interesting research paper, it's a few years old now, by Raphael Auer, dealing with that kind of question. Just Google Auer and then embedded supervision, that kind of like answers that question that you have. And eventually we're going to have the regulator utilizing that kind of technological infrastructure. I'm pretty convinced.
We're a bit short on time, unfortunately. There's many questions. Sorry for that. So why, let me maybe ask something as proxy. So why should people be, excited about institutional DeFi as personal human beings here at TUM Blockchain Conference? And how can they make a following of yours on whichever network or whatever to keep being in the loop of institutional DeFi happenings?
Shall I start? Because why should people get excited about that? Because it basically combines the best of both worlds. kind of like salted caramel. You really have the security and safety of the traditional markets. That's where the institutions come in. And you also have basically financial markets on steroids, on safe steroids from the DeFi side. So you combine the best of both worlds. And that is actually something to get super excited about. Now you have to have the right pillars in place, and you need someone that guides you through the regulatory maze, for instance, but definitely something to get super excited about.
Yeah, I think everyone is talking about how can crypto come to the masses and that it's really finds mass adoption and whatnot. But I think over the past years we've seen many shit coins, meme coins, whatever, launching, and so I think there were the ratio of new coins hitting the ecosystem versus new users is quite bad. Yeah, so it's because I think we haven't seen so many new users in the space in the meanwhile, and therefore I would say so far when it comes to mass adoption we did not succeed. Yeah, so we actually need to make it better, and I think so if we get the institutions into the space, this really means that we get access to much more people consuming the things that we build, and I think that is a very fundamental path to really bring crypto and blockchain technology to the masses.
Like Hagen mentioned, the best of both worlds. Basically, if you basically take a little bit time look back a few years when DeFi was very, 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 very early, yet alone the user interface was terrible. That so many people lost so much money on DeFi because they forgot about to hit one button in the user interface. And I mean the good thing about the traditional finance stuff is then you have your banking app, your N26, your Revolut, which is usually very convenient. And if you combine this with all the products and all the range of products you can basically use in the DeFi world with a good UI and a good UX, then you're basically at least it's pretty attractive for most people.
I think. Okay, sorry. I think that's actually it. You're done, right? Amazing. Big round of applause for our last panelists.